In this video, I'm gonna cover the 3 most common penalties you'll receive from the IRS and how to avoid them at all costs. But in order for me to teach you how to avoid them, I've gotta first teach you what they are. So I prepared this document for you. We're gonna cover the failure to file penalty for individuals, the failure to file penalty for businesses, the failure to pay penalty, and the underpayment of estimated taxes by individuals penalty. Trust me, if you watch this video, you are likely gonna learn something. Even I learned some extra nuances about this stuff while preparing this video for you. So let's go through this one by one. I'm gonna show you the IRS website as well. So we're covering the failure to file penalty, failure to pay, and the underpayment of estimated tax by individuals. So, and I'll leave links in the description that cover these items in more detail if you want to read more about it on the IRS website, okay? So, failure to file individual. Most people understand this one, but let me quickly cover it. This is going to be for the applicable tax year. So if you're filing your 2024 tax return in the future, this will be for the 2025 calendar year. If that sounds complicated, let me kind of break it down as if it was this tax year. The applicable tax year is 2023, right? That's covering a 12-month period. So you need to file this by April 15th of 2024. However, if you file an extension, that will give you 6 more months, and now your individual tax return is due October 15th. Let's read what I've got here in this box. The penalty occurs if you don't file your individual tax return by the due date or by the extension due date. It is worse than the failure to pay penalty, which we're going to cover here in a moment. So you always want to file your tax return or a tax extension timely, even if you don't have the money to pay your taxes. Why? Let me explain that by showing you the IRS website as to what the penalty is for a failure to file. If you don't file your individual tax return, then the penalty is 5% of the unpaid taxes for each month or part of a month that a tax return is late. And there are some minimum penalties that they might charge you to, which are further down below, which you can read on your own. Like I said, I'm going to provide the links in the description below. But what about your business? Okay, we saw that your individual tax return, 5% of the unpaid taxes is what is going to be your penalty. What about business returns? Okay, let's look at those. So for the business tax return, this is if you have a business that's taxed as an S corporation or that's taxed as a partnership. It's due on March 15th, so 1 month prior to the individual tax return. If you're wondering, like, hey, Navi, you didn't cover like what happens if my business is taxed as a sole proprietorship or a C corporation? Well, that's the individual deadlines. It's April 15th or October 15th. And that's for both the Schedule C filer and the C corporation. But if your business is taxed as an S or a C corporation, then you need to file by March 15th or September 15th with a valid, timely filed extension. So this penalty occurs if you don't file your business tax return by the due date. Again, always try to file your tax return or extension, even if you don't have the money to pay your taxes. Let me show you though, what the failure to file penalty is for a business. And as you can see here, the penalty is $220 for each person who was a shareholder or a partner at any time during the tax year. Okay, and this is a charge that you will receive for each month or part of a month. So if you don't realize that your tax return is due for a business in March, right, because you thought it was April like your individual tax return has always been, well, you'd be wrong. And you'd get a penalty for being late for part of March and part of April. And it's $220 per month, right? So that's $440 just for being late for part of March and part of April. Now, if you're an S Corp with multiple owners, let's say husband and wife or a third party, or if you are a S corporation that has multiple shareholders, it's per person, right? Or per shareholder or per partner. So it can easily be $880 if you have 2 S Corp owners or a partner, right? By having a partner by default, that means you have you and another person, and you miss it by a couple months, you're down $880, okay? So it's very important that you file your taxes timely or file an extension. Now, let's move on to this next one, failure to pay. For most of you, that payment is due on April 15th, okay? So this penalty occurs if you don't pay the taxes you owe by April 15th of the following year. So what's an example of this? You prepare your tax return and determine that you owe $10,000 in taxes, okay? If you make that payment on or before April 15th of the following year, then you're off the hook for the failure to pay penalty. But in a moment, I'm going to show you how you can actually still receive a penalty even if you pay that $10,000 by April 15th. But before I do that, let's quickly look at the failure to pay penalty, which is right here. The failure to pay penalty is 0.5% of the unpaid taxes for each month or part of a month the tax remains unpaid. So do you see why I said that the failure to file penalty is much worse than the failure to pay penalty? Failure to file is 5% of the unpaid taxes for each month, but the failure to pay penalty is 0.5%, okay? So it's much less. So if given the option to file versus pay, you want to file first, and then you can pay later if you can't do both at the same time. Okay, so that's the failure to pay penalty for individuals, all right? Now, a moment ago I said, hey, you could owe $10,000 in taxes and pay that on April 15th or before April 15th, but still get a letter from the IRS saying, hey, you owe us money. Now, why would that happen? That's because whether you're an individual or a business owner, you need to be making quarterly estimated tax payments. And the average person calls this quarterly estimated tax payments, but that's actually a misnomer, right? It's not actually quarterly because the IRS splits it up into, weird quarters, if you will. So the first period is January 1st to March 31st, which covers 3 months. That payment is due April 15th, okay? So what am I saying here? I'm saying, let's pretend that, yes, if you didn't pay any taxes throughout the year, you owed $10,000 in taxes by April 15th, and you paid those taxes on or before April 15th. Well, what were you supposed to do, assuming you earned your income equally throughout the year in each quarter, you were supposed to pay $2,500 by April 15th, which covers this period, then another $2,500 by this date, which covers April 1st to May 31st. You'll notice that's only 2 months. And then another $2,500 for the June 1st to August 31st period, which is a 3-month period. And then another $2,500 by January 15th of the following year, which is covering 4 months, right? September, October, November, and December. So let's read what I've got listed here. This penalty occurs if you don't make estimated tax payments each quarter. You can pay 100% of your taxes by April 15th, which is what we did here, right? We said we paid $10,000 by April 15th, but you can pay those by April 15th and still receive this penalty for not making estimated tax payments throughout the year. And in this video, I'm covering the federal tax payments, but your state, if you live in a state that has state taxes or state income taxes, I should say, you have a schedule similar to this. I say similar to this because some states, I believe like California, they don't match the same quarters as the federal IRS does, okay? So pay attention to your state. The due dates could be different. Let me quickly show you on the IRS website where that information is about underpayment of estimated taxes. So they teach you here how they calculate this payment. It's based on the amount of the underpayment, the period when the underpayment was due and underpaid, and the interest rate for underpayments. And as you know, we've been in a rising interest rate environment for the past 1.5 years or so. So these penalties are increasing. It's probably higher than you've paid, when we've been at what they call ZIRP or zero interest rate policy. So, pay attention to this. These penalties can add up. We are on a pay-as-you-go system. So here are the dates that are, I showed you that relate to the federal tax return. These are the periods or the quarters, you can call them, and these are the due dates. So pay-as-you-go essentially means that as you're earning the profit in your business or as you're receiving pay from your employer, you need to be making estimated tax payments. So these are the various penalties that you can incur, and those are the various ways to avoid the penalties if you can. So remember, failure to file, you avoid that by filing either your actual return or the extension by April 15th, right? For the business, you want to do that by March 15th if your business is taxed as an S corporation or a partnership. If you file the extension, it's for 6 months and then it's due September 15th. Failure to pay, this is for your individual taxes. You got to pay these by April 15th or earlier and you would be fine. But then don't get confused. Even if you make that, in our example, $10,000 payment on April 15th or before April 15th, you still will receive an underpayment of estimated tax penalty because you didn't make estimated tax payments while you were earning those profits in your business or while you were earning your wages as an employee. And so those due dates are April 15th, June 15th, September 15th, and January 15th for the corresponding periods of time. So to emphasize that one more time, you can still get a penalty even if you pay your taxes by April 15th, which sounds ridiculous, I know, but it's because we're on a pay-as-you-go system here in the US. And so you pay your taxes on a quarterly basis, and these are the quarters. It's not an equal 3 months throughout the year. Some periods it's 2 months, and some periods it's 4 months. So I hope this was helpful. This was a video talking about the penalties that you incur and how to avoid those penalties. But in most of my videos, I'm teaching you about tax strategy, okay? And how to save thousands of dollars in taxes as an entrepreneur. You can find out more details on how to do that by checking out my other YouTube videos or visiting my website, which is nabimuradcpa.com. I have a course there. If you enroll in that course, that's how you transition yourself from someone who doesn't know about these things, right? As well as all the tax strategies I work with my very own clients, and how to implement those strategies using QuickBooks. It'll help you save thousands of dollars in taxes. You can check that out if you'd like. If not, I'll either see you in the course or in the next video.